You're listening to Uranium Spotlight, brought to you by PurePoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, PurePoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, Japan signals new reactor builds. U.S. uranium output lags demand, and McLean Lake showcases innovation and high-grade supply with saber mining and fresh discoveries. The uranium spot price closed last week at $71.50 a pound, down about 70 cents from the prior week's close of $72.20. Activity in the spot market was muted as much of the industry was focused on what may be the last July NEI-NF-SF meeting in Washington, D.C. Volumes picked up slightly by week's end, but overall spot demand fell, with spot recording only one early week purchase and staying quiet afterwards. Offers, particularly for Cameco delivery, softened steadily through the week, ultimately clearing at $71 by Friday. Orano delivery deals held up slightly firmer at $71.25, while Coverdine offers slipped up to $71.50. In total, spot market volume for July so far stands just over 1.6 million pounds across 15 transactions, which remains modest compared to earlier months. On the term side, activity continues to build. While no contracts were awarded last week, several U.S. and international utilities have active tenders out, with deliveries stretching into the 2028-2036 window. At least 4 new RFPs hit the market recently, including one U.S. utility seeking up to 400,000 pounds annually, plus options into the 2030s. Meanwhile, others continue to negotiate off-market for a blend of mid- and long-term supply. For uranium equity investors, the takeaway this week is a quieter spot market as summer meetings absorbed attention, but sustained, growing term demand signals ongoing confidence in longer-term fundamentals. If you haven't already, be sure to subscribe to Uranium Spotlight podcast, available on your favorite podcast platform or on PurePoint Uranium's YouTube channel. Japanese utilities are signaling a return to the reactor building business, a move aimed at strengthening the nation's energy security while also addressing climate goals. Since the Fukushima disaster in 2011, most of Japan's nuclear fleet has been idle. That accident, triggered by the massive earthquake and tsunami that claimed nearly 18,000 lives, remains one of the most consequential events in nuclear history. Notably, no deaths were directly attributed to the radiation exposure, though some cancer cases are still under investigation. The political and regulatory fallout, however, was dramatic. Japan shut down its entire fleet, imposed stringent new safety standards, and held utility operators to account, including a successful lawsuit against TEPCO, which operated the Fukushima plant. Fast forward to today, and 14 of Japan's 33 operable reactors have restarted under the tougher regulatory regime. Kansai Electric, one of the country's largest utilities, has now indicated it's exploring new reactor construction, not just to replace aging units, but to improve overall safety and reliability. While Kansai stopped short of confirming concrete plans, reports from Nikkei Asia suggest that site surveys for a potential new plant are already underway. What makes this especially noteworthy for uranium investors is Japan's unique position in the global nuclear market. Japan remains deeply dependent on imported energy. It has virtually no domestic uranium resources. So every new reactor that comes online represents incremental demand in the global uranium market supplied entirely through imports. And here's where the market tension becomes clear. Many Western-aligned countries, including Japan, are actively reducing reliance on Russian uranium, while Chinese and Russian buyers continue to lock up Kazakhstani supply. That leaves countries like Japan increasingly dependent on production from stable, Western-friendly jurisdictions like Canada and Australia, both of which are already under pressure to meet rising demand from the U.S. and Europe. For uranium equities and investors watching the market, Japan's nuclear revival adds another layer of structural demand to a supply chain that is already tight. If Kansai and others move forward with new builds, it underscores the growing confidence in nuclear's role and the need for reliable uranium supply. Investors should keep an eye on Japan's policy signals. Every restart, and certainly every new build, strengthens the long-term case for higher uranium prices and benefits producers with access to secure, scalable production. U.S. uranium production fell again last quarter, underscoring just how far the country remains from any meaningful self-sufficiency, despite years of policy initiatives aimed at reviving the sector. Production today remains a shadow of what it once was. After peaking decades ago, U.S. output has collapsed since the Obama years, with sharp declines accelerating around 2018. Multiple attempts by the Biden administration and the current administration to support domestic mining and milling have so far failed to move the needle in a significant way. Quarterly production in 2024 and now 2025 continues to hover between 300,000 and 400,000 pounds of uranium oxide. To put that into perspective, that's barely enough to fuel a single nuclear reactor for a year, while the U.S. operates the largest nuclear fleet in the world with 94 reactors. Those reactors require roughly 45 to 50 million pounds of uranium annually, or about one-third of the entire world's mine supply. This reality leaves the United States heavily reliant on imports from countries like Canada, Kazakhstan, and others. In this respect, the U.S. finds itself in much the same position as Europe and Japan, major nuclear energy consumers without large domestic uranium resources. Globally, the pattern is clear. Nuclear power plants are almost never co-located with meaningful uranium supply. Canada is the rare exception, a uranium-rich nation that also operates a sizable nuclear fleet. That unique position gives Canada an outsized stake in the global uranium market. Meanwhile, uranium powerhouses like Kazakhstan and Namibia are beginning to explore nuclear power for themselves, but their domestic fleets remain negligible. And Australia, despite holding some of the world's largest uranium reserves, has long maintained a political ban on nuclear energy and strict limitations on uranium mining, prohibited in 6 of 8 states. For investors, this misalignment between where uranium is mined and where it is consumed creates both structural vulnerability and opportunity. Countries dependent on imports, like the U.S., will remain sensitive to supply disruptions, trade restrictions, and pricing power from producers. At the same time, it underscores the strategic value of reliable, low-risk production from jurisdictions like Canada. Bottom line, the persistent weakness in U.S. production highlights the fragility of global supply and the growing premium placed on secure, politically stable sources of uranium. That's an important dynamic to keep in mind as the market adjusts to stronger long-term demand and ongoing political risks. Orano Canada and Denison Mines have delivered 2 significant developments this month at their McLean Lake joint venture in Saskatchewan, marking an important step forward for uranium supply from the Athabasca Basin. First, the partnership announced the successful start of commercial uranium mining at McLean North using SABRE, their patented surface access borehole resource extraction method. This is the first time SABRE has been deployed at full scale, recovering about 250 tons of ore, grading over 10% U3O8 from its initial cavity. The system has already moved to its second cavity, with processing of the first ore underway at the McLean Lake Mill. SABRE is notable for its minimal surface footprint, lower energy and water use, and ability to selectively and quickly mine small, high-grade deposits that would otherwise be uneconomic, all while reducing worker exposure. For investors, it signals an innovative way to bring on supply more flexibly, at a time when market conditions are shifting. In parallel, exploration at the nearby McLean South Zone continues to expand the resource base. Orano drilled 6,400 meters earlier this year, returning several impressive intercepts from the 8C and 8W pods. Highlights include 7.5% EU308 over 5.4 meters and 3.5% over more than 11 meters. In total, 14 of 24 holes hit significant mineralization, confirming and expanding the footprint of these high-grade zones. McLean South lies just 600 meters from the new SABRE operation at McLean North, positioning it as a potential future source of mill feed. For uranium investors, these developments underscore a few key themes. First, we're seeing tangible innovation in mining methods, allowing companies to unlock smaller, high-grade deposits faster and with less environmental impact, aligning well with utilities' needs for reliable, low-carbon fuel. Second, exploration is still delivering meaningful discoveries in the basin, even near long-established operations. The third, McLean Lake's large licensed mill and historic production track record give it unique strategic value as uranium prices and contracting momentum continue to build. In short, the McLean Lake joint venture is proving that with innovation and investment, even mature districts can deliver new high-grade supply, a welcome signal for a market still in the early stages of addressing a structural supply gap. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.